The bustling streets of New York City in 2008 painted a stark picture of economic uncertainty. Michael Stone stood at the corner of Fifth Avenue, his threadbare suit a reminder of his humble beginnings. Born to immigrant parents who ran a small convenience store in Brooklyn, Michael learned early that success wasn't handed out, it had to be earned through sweat and determination. Have you ever wondered what drives someone to risk everything when they have nothing to lose? The financial crisis had just begun to show its teeth, and Wall Street giants were tumbling like dominoes. While others saw chaos, Michael recognized patterns. Working as a janitor in one of Manhattan's prestigious financial firms, he spent his nights studying the discarded financial reports in empty offices. What others saw as trash, he saw as treasure, fragments of knowledge that would later become the foundation of his empire. His mother had always told him, success leaves clues, and in those quiet hours after midnight, Michael pieced together these clues like a detective solving the most important case of his life. The market was changing, but more importantly, people's behaviors were shifting. Traditional investment models were crumbling, yet few seemed to notice the emerging opportunities in digital assets and automated trading systems. Living in a tiny studio apartment with barely enough space for a bed and a desk, Michael used his old laptop to create his first trading algorithm. The irony wasn't lost on him. While cleaning the offices of millionaires during the day, he was building the tool that would eventually make him one of them. But what separates those who dream from those who achieve? The winter of 2008 proved particularly harsh. As temperatures dropped, heating bills soared, and Michael had to choose between warm meals and keeping his internet connection. He chose the internet. In those frozen nights, wrapped in 3 blankets, he coded until his fingers went numb. The question that kept him going wasn't, will this work, but rather, what if this actually works? His first breakthrough came after analyzing 273 failed attempts at perfecting his algorithm. Each failure taught him something new about market behavior, human psychology, and the intricate dance between fear and greed that drives financial markets. The pattern he discovered would later revolutionize automated trading, but at that moment, he was just a janitor with a dream and a frozen cup of coffee. What makes someone persist when logic suggests giving up? For Michael, it was the memory of his father's words on his deathbed, "The world doesn't care about your excuses, only your results." These words would echo in his mind through countless setbacks and challenges, becoming the cornerstone of his resilience. The year 2009 marked the moment when Michael Stone made a decision that would send shockwaves through Wall Street. While financial institutions were still reeling from the crisis, he launched Stone Algo, his automated trading platform, from a public library computer. What drives someone to launch a financial revolution from a public terminal? The conventional wisdom said retail investors couldn't compete with institutional traders. Michael didn't just challenge this notion, he shattered it. His algorithm identified micropatterns in market behavior that larger institutions were too cumbersome to exploit. Within 6 months, his initial investment of $3,000, borrowed from his mother's emergency fund, had grown to $75,000. But success breeds scrutiny. Traditional trading firms began to notice unusual patterns in certain market segments. Who was this mysterious trader consistently outperforming seasoned professionals? The pressure mounted when several firms attempted to reverse engineer his trading patterns. Michael faced a crucial decision: sell his algorithm to the highest bidder or maintain control and risk everything. The turning point came during a rainy October evening. A prominent hedge fund offered him $15 million for his technology. Most would have taken the money and run. But Michael saw something others didn't. The future of finance wasn't in traditional institutions, but in democratizing trading for everyone. How many others had dismissed similar opportunities because they couldn't see beyond immediate gratification? His refusal to sell became legendary in certain circles. Instead of cashing out, he invested every penny of profit into expanding his platform's capabilities. He hired 2 brilliant programmers he met at coding meetups, working from a converted garage in Brooklyn. Together, they enhanced the algorithm to handle multiple asset classes simultaneously. The real disruption came when Michael made StoneAlgo available to retail investors for just $99 per month. Traditional firms charged thousands for inferior services. The financial establishment called him a madman. Industry experts predicted his imminent failure. But Michael understood something fundamental about the modern economy: accessibility breeds loyalty, and trust builds empires. By the end of 2010, StoneAlgo had over 10,000 active users. Each success story from a small investor added to the platform's credibility. Michael had created more than a trading algorithm. He had built a community of empowered investors. What happens when you give people the tools they've been systematically denied? The financial industry's response was swift and aggressive. Regulatory challenges, smear campaigns, and attempted cyber attacks became daily obstacles. But how do you stop an idea whose time has come? In 2011, Michael Stone faced his greatest challenge yet: scaling StoneAlgo while maintaining its effectiveness. The platform had grown beyond his wildest expectations, but with growth came complexity. How does one transform a successful product into a sustainable empire? Michael's approach to resource management defied conventional wisdom. Instead of seeking venture capital, he implemented a unique profit-sharing model with his users. Every successful trade contributed to a community pool, creating a self-sustaining ecosystem. The innovation wasn't just in the technology anymore, it was in the business model itself. His most controversial decision came when he invested 40% of the company's profits into artificial intelligence research. At the time, AI was still considered speculative technology by many in finance. But Michael recognized that the future of trading wouldn't be driven by traditional analytics alone. The question wasn't whether AI would transform finance, but who would lead that transformation. The breakthrough came in the form of Neural Network 7, an AI system that could analyze market sentiment across 78 different languages simultaneously. This wasn't just about numbers anymore. It was about understanding the human elements that drive markets. The system could detect subtle shifts in global sentiment hours before they impacted market movements. Resource allocation took on new meaning when Michael introduced the Knowledge Treasury, a revolutionary training program that transformed regular investors into market analysts. Users who contributed valuable insights to the community received platform credits and advanced features access. This created a self-improving ecosystem where knowledge became the most valuable currency. The true genius of Michael's strategy lay in its simplicity. Every resource, whether technological or human, served multiple purposes. The AI system that predicted market movements also trained new users. The community that benefited from the platform also improved it. What happens when you turn your user base into your strongest resource? By mid-2012, StoneAlgo wasn't just a trading platform, it had become a financial education ecosystem. The company employed over 300 people, but its real strength lay in its community of 100,000 active contributors. Each user was both a beneficiary and a resource, creating a network effect that traditional firms couldn't replicate. Michael's approach to intellectual property was equally revolutionary. Instead of hoarding patents, StoneAlgo open-sourced certain algorithms, allowing the community to improve them. This decision, considered suicidal by competitors, actually strengthened their market position. After all, how do you compete with a platform that has thousands of brilliant minds constantly improving it? By 2013, Stonalgo's influence had transcended national boundaries. The platform's success in New York had caught the attention of financial centers worldwide. But how does an algorithm designed for American markets adapt to the nuances of global finance? The expansion into Asian markets proved particularly challenging. Japanese traders approached algorithms differently than their Western counterparts. Michael's team spent 6 months living in Tokyo, immersing themselves in the cultural nuances of Asian trading patterns. The result? A completely redesigned interface that incorporated Eastern philosophical principles of balance and harmony into its trading strategies. European integration brought its own set of challenges. Each country had distinct regulatory frameworks, and the European Union's financial regulations were notoriously complex. Rather than viewing these as obstacles, Michael saw them as opportunities to enhance the platform's sophistication. Stonalgo became the first trading platform to automatically adjust its strategies based on jurisdiction-specific regulations. The platform's impact on emerging markets was unprecedented. In Brazil, small-scale investors who had been traditionally excluded from meaningful market participation suddenly found themselves competing effectively with institutional traders. Similar stories emerged from India, where Stonalgo's accessibility transformed thousands of middle-class professionals into successful part-time traders. Perhaps the most significant global impact came from Stonalgo's role in market stabilization. The platform's AI began detecting and flagging potential market manipulations across different time zones. This capability attracted the attention of financial regulators worldwide. What happens when technology designed for profit becomes a tool for market integrity? By 2014, Stonalgo was operating in 47 countries, processing trades worth billions of dollars daily. The platform had become a global financial nervous system, connecting traders across continents and creating a more democratic financial marketplace. Traditional power centers in finance began to shift as new hubs of trading activity emerged in unexpected places. The platform's influence extended beyond finance. Universities began incorporating Stonalgo's methodologies into their curriculum. Governments consulted with Michael's team on financial technology regulations. The question was no longer about how to make money in markets, but how technology could create fairer, more efficient global financial systems. This global expansion revealed a fundamental truth: financial technology wasn't just about algorithms and profits, it was about creating access and opportunity. When you remove artificial barriers to market participation, how does it change the global economic landscape? The statistics behind Stonalgo's growth tell a story that defies conventional business metrics. From 2015 to 2016, the platform's user base grew from 300,000 to 2 million active traders. But what makes these numbers truly remarkable isn't their size, it's their impact. Consider this: the average Stonalgo user increased their trading profitability by 420% within their first year. Traditional investment success rates hover around 30%. The platform's artificial intelligence system processed over 3 trillion data points daily, identifying trading opportunities that would be impossible for human analysts to spot. The financial impact extended far beyond individual traders. Stonalgo's community fund, built from a small percentage of successful trades, grew to $1 billion by 2017. This fund provided zero-interest loans to promising fintech startups, creating an ecosystem of innovation that spawned 78 successful companies. Employee productivity numbers shattered industry standards. While traditional financial firms averaged revenue of $300,000 per employee, Stone Algo generated $2.7 million per employee. The platform's automated systems handled 98% of trading decisions, operating at a speed and accuracy level that made human intervention necessary only for strategic oversight. Market influence metrics revealed an even more stunning picture. By 2018, Stone Algo's trading volume accounted for 12% of all global retail trading activity. The platform's risk management systems prevented losses estimated at $37 billion during major market downturns, earning it the nickname, the Market Guardian. The educational impact was equally impressive. The platform's learning system awarded over 1 million certifications, creating a new class of financially literate traders. Graduates of Stone Algo's advanced trading programs reported average income increases of 340% within 2 years. Technology performance metrics set new industry standards. The platform's core algorithm executed trades in 0.003 seconds, while simultaneously analyzing over 700,000 market variables. System uptime maintained at 99.999%, exceeding even military-grade reliability standards. These numbers tell a story of transformation, but they also raise profound questions. When technology democratizes financial success at this scale, how does it reshape society? What happens when artificial intelligence not only matches but consistently outperforms human financial expertise? The answers to these questions would shape the next phase of Stone Algo's evolution. The story of Stone Algo reveals fundamental truths about innovation, resilience, and the future of global finance. Looking toward 2025 and beyond, the lessons learned shape a roadmap for future transformation. What insights can we extract from this remarkable journey? First, the power of democratized finance has proven transformative. Traditional barriers between institutional and retail traders have not just been lowered, they've been obliterated. The future points toward even greater accessibility, with Stone Algo's next-generation platform aiming to operate in 200 countries by 2027. When financial sophistication becomes universally accessible, how will it reshape global wealth distribution? The role of artificial intelligence in finance has evolved beyond simple automation. Stone Algo's systems now demonstrate predictive capabilities that consistently outperform human analysts by 700%. The next frontier involves quantum computing integration, promising processing speeds 1,000 times faster than current systems. But this raises critical questions about the nature of financial decision-making itself. Market behavior patterns have revealed surprising correlations between global events and trading opportunities. Stone Algo's success proves that understanding these patterns requires both technological sophistication and human insight. Future projections suggest that hybrid decision-making systems, combining artificial and human intelligence, will become the new standard. The platform's community-driven model has demonstrated that collective intelligence, properly harnessed, can outperform traditional institutional expertise. Looking ahead, Stone Algo plans to expand this model into new financial territories, including decentralized finance and digital asset trading. What happens when millions of minds collaborate through advanced technology? Risk management has evolved from a defensive tool to a strategic advantage. The platform's ability to predict and prevent market disruptions has created a new paradigm in financial stability. Future developments will focus on expanding these capabilities to address emerging market challenges and new forms of financial instruments. Perhaps the most significant lesson is that true innovation often comes from unexpected places. Michael Stone's journey from janitor to financial revolutionary demonstrates that transformative ideas can emerge from anywhere. The future belongs not to those with the most resources, but to those who can best adapt to and shape change. As we look toward the future, one question becomes increasingly relevant. In a world where financial technology continues to evolve at an exponential rate, what new possibilities await discovery? The answer may well define the next chapter in human economic development.